and welcome out to our show here on our YouTube channel. It's Tackle Trading's Halftime Report, where we go through the markets a step at a time, breaking down the charts, the news, the information, earnings reports while we're in earnings season, giving you guys some analysis and some insight from the coaches here at Tackle Trading so you can better run your daily routine as a trader. And welcome back, Team Tackle. As you're coming into the show here, hashtag Team Tackle right in the chat. That's our official hashtag. Always gets the conversation started in a great way. I love the energy in that chat each and every day. I'm always watching there, guys. I'm always watching and participate. You know, if you're that kind of wallflower that sits back on the sideline, jump in there, ask a question, answer a question, be a part of that conversation as we have it. And I want to welcome Coach Tyler Craig back from vacation. We got Matt here. We got myself here, and Tyler's back here on a Wednesday. Tyler, how was the time on the beach, the time away? Are you reset? Are you all ready to go? Or do you want to go back to that beach? How you doing, my friend?
I'm doing good, man. I'm excited to be back. And 7 days is a little long. Those last 2 days doing nothing. I'm like, I gotta get back, see what the market's doing. So I got lots to talk about and love the market.
As a market participant, I'd like you to go back on vacation.
You can take another 7 days, bro.
Yeah, it's been fantastic trading without you, bro.
The last 7 days since you left, we've had a pretty good rally in the market.
Tyler's like, I was sitting on that beach. I wanted to day trade. This was nonsense. We know the drill. We know the drill. Tyler's looking at the price saying,
It looked tasty. You guys did a good job. You did a good job while I was gone. Well done.
Matt, how are you doing on a Wednesday?
Doing fantastic. Excited to be here with the crew, and I am very excited to have Tyler back. Tyler's technical read stands out above anybody's that I know. Love getting his technical take, and his technical reads certainly influenced my technical read. So I'm always glad when Tyler's back.
100%. And I know that Team Tackle's back. Glad to have you back as well. Tyler, you got your lab here for the Phoenix lab here on your Wednesday event. You also have an event tonight where you're going to be going through the cash flow condors mastermind group. Is that correct?
Yeah. And we're going to be looking at December options. Interesting pricing going on with the Russell. They're not listing strikes in $10 increments, much higher than the current market value. So we're going to have to talk about some tricks on how to build out a condor with the insufficient availability of strikes here.
Yeah, no, it's going to be interesting with that. I know that that's a system that you've been running for a very long time. Whenever you get these little subtleties or whatnot, that's why the mastermind group is such an important part of it. And it's tonight, guys. And I want to remind you a couple things. If you're a part of that group, great, come and join us again. But we have opened all of our mastermind groups up to pro members, Matt. So even if you're not a part of that, if you're a pro member at Tackle Trading, you have access to those MMGs. Matt, I'm excited about that new step, by the way, at Tackle Trading. I think it's going to give opportunity to a lot of pro members to learn from these coaches.
I certainly agree with it, and I'm excited to see what Tyler has to say here tonight in that mastermind group for cash flow condors. I mean, Ty, let's go ahead and look at the Russell 2000 very quickly. One of the questions I have as a cash flow guy is basically as the market is approaching a potential breakout of 2,300, we're starting to see, a bullish volatility come in many aspects of the market. The question I would have is, how do you approach the strike prices from a bear call perspective, as well as the market navigates a potential breakout, and the management conversations that certainly do follow that as well? I think it's a great time to talk about those types of things. It's a wonderful moment to have a mastermind on cash flow condors.
100% agree. Timely and relevant. And by the way, you can find those, any of the events we do on the back end of Tackle Trading on the events calendar, right under the Trade Center, right under the website. Let us know. We'll talk more about that at the end of the show. I'll make sure we know everything's going on tonight, including Trade Masters. Tyler, I'm taking on Coach Emily, little mentor-mentee head-to-head Trade Masters competition. I'm excited about.
I'm excited about that one as well. Excited to watch you two go head-to-head, and excited to have Tackle Trading community judge that.
I agree. It's going to be a fun one, no doubt about it. But we got to get to market analysis here today. There's a lot to unpack. And obviously, we have had a rally here in the market, higher pivot low, little breakout above the 50-day moving average. We're now up 6 bars in a row. Let's get Coach Tyler's read first here from a technical perspective. What are you seeing in these markets, Tyler? We've been analyzing them day by day, the healthy improvement. What is your read on the marketplace?
Well, let me give you a little summary from when I left, because this is what things looked like on the 12th, which is the day that I left. So, and this is, I think, an exercise that we all have to go through from time to time, where we're away on work or business or something, and then we don't, you get out of sync with the market for a week, and then you got to take a fresh look and see what happened. For me, if you want to become a really good chart reader, it's less about what happens in each individual candle, and it's more about the relationship between the pivots. And you've heard us talk about that all the time. But when I left, and you look at the last couple of pivots here, we were in a downtrend, right? We still had an uninterrupted series of lower highs and lower lows. But the moment I leave, the market formed a higher pivot low here. That was a change in character. It followed it up by breaking the prior pivot high and making a higher high, which we haven't even made the pivot yet, but we took out the prior pivot high after making a higher pivot low. I'm sure you guys were all over this. That is a reversal characteristic. We took out the 50-day moving average. It would have been very, very difficult to spin the market bearish after October 14th. You simply didn't have any technical evidence to go off of. And sure enough, ever since then, it's been a straight shot higher. What makes this so wonderful is that you've had follow through. Look, sometimes the market will try to reverse, gives you a false start, and then comes back down. What makes this so delightful is that as soon as it made the higher pivot low, it said, let's go. And you've seen nothing but price increases, not just with the S&P, but like across the board. Everything looks fantastic right now. The commodities and inflation sensitive stuff has been rocking. Bitcoin has been rocking. To your earlier point, I should leave more often if this is what I'm going to come back to.
Well, it's been a nice week. There's no doubt about it. And yes, Coach Matt has been all over that reversal on the S&P 500, detailing it day by day by day. And that started, Matt, really on the intraday analysis as we were forming that higher pivot low. Go back to a couple of weeks ago, we had a podcast on reversal analysis in the market. It's so important in any market to understand the nature of trend and pivot points and price action as it's telling you a story, Matt. But the sentiment has also shifted a little bit here during the month of October. Just quickly, Matt, what is your broad read on these markets as well on the S&P 500?
Well, from a technical perspective, I'm right there with Tyler. The reversal was very consistent. Last week, we did for the Step System Mastermind group, literally last Wednesday, I did the reversal analysis video for the Mastermind group. And, a lot of that was based on what we were seeing in the market reversing as well, with that higher pivot low, forming there on October 13th. And then, you've seen it reclaim all the moving averages, the 50, the 9, the 20. Emily asked me the question, hey, Halloween, do we hit that all-time high before then? I'm like, yeah, Thursday. Let's go. The market is showing you their appetite for the market right now. And, we're certainly overextended in the short term. You're now 6 bars into the move, and you're coming into the all-time high. It would not surprise me in the slightest to see a little bit of consolidation here as we approach the all-time highs, to see a little bit of profit taking perhaps as well, because even though the technical condition has certainly improved, and the backdrop of earnings so far has been more positive than not. Outside of guidance, there's been some guidance concerns. But outside of that, I mean, the fundamental questions that we had in October and September are still present today. It's just the technical condition has improved. And so this market over the course of the last 6-7 weeks, in my opinion, has been a very technically driven marketplace. And until that technically driven marketplace starts showing a little bit of inconsistency, I'm simply going to apply technical guidelines. And as you're 6-7 days into a price movement and you're approaching all-time highs, typically speaking, you'll see some degree of profit taking, some degree of hesitation, a little high base to a certain extent as you fight through that resistance level. But all positive steps for the marketplace. You got to really be impressed with the market's resiliency over the course of the last week and a half. You got to love the reversal that it was based upon. Now you're fighting up against the all-time highs, and this is why you never puke up short-term bear markets. This is why you always just got to be patient, let the reversals play out, let the behavioral analysis come in, let the catalyst start building, and sometimes, like Tyler went on vacation, sometimes going on a vacation from the marketplace in often in volatile times, you come back to a little bit more consistency after the markets calm down. So I do think this market is looking very, very good right now. But again, 6-7 days into a price movement, you're coming into all-time highs. Wouldn't be shocked if we see a little bit of consolidation.
Yeah, I agree with that. It would make sense, at least from a common sense perspective. Do you guys have any concern that the volumes lightened up here the last few days? I mean, is that indicative of maybe just that Apple computer and Google and all those are next week? The market's not really driving it, or is it just the light range candlesticks? I mean, Matt, do you have any concern about volume tapering just a little bit?
I think so, a little bit. Enough to make you hesitate? No, I don't think so. But in the back of your mind, you gotta be thinking about where is all of the market participants. But if you actually go back and look at volume and price action over the past year, I don't think you'll see a low volume environment and upward movements in price and be too concerned about it.
No.
You go look at a lot of the upward movements in price over the last year, and they're actually on lower volume than some of the downward movement in prices. This is pretty common for the market. And so, yeah, volume to me can be concerning, and it is a little bit. The volume is fading over the course of as we approach those all-time highs. But once again, just think about what I just said. You're 5-6 days into a price movement. Yeah, I think taking in a little bit of profit isn't necessarily a bad thing as you fight against those all-time highs. So to answer the question, yes, slightly concerned. Enough to change your bias towards this price movement? No, not in my opinion. Not based on the past year. I've seen too many price movements that were very consistent to the top side without volume supporting it.
Gotcha. All right, very good. Then appreciate you answering that question. By the way, you called Thursday for the all-time high there, in tongue in cheek with Emily. Not
Yeah,
really
it might be
tongue-in-cheek, by the way.
today.
Could be today. 0.5% more we would need through the rest of the day, and the technical intraday chart is still.
Let's
in
just
very good
doji
condition.
so I can be right. Isn't that how it's played?
Yes.
Yeah, that's okay. Good.
I believe the phrase is it's better to be right than make money.
Okay, that's let's doji. Let's make Matt right tomorrow. I can't tackle. I could care less.
Mark is going to play itself out one way or the other. All right, Tyler, can you flash me through all the indexes? Tell me what you see from a relative strength, weakness perspective. S&P obviously pushing the high. Dow's about to break out of its high as well. What are you seeing across these indexes?
Yeah, so the laggard's been tech. NASDAQ is, and how do we know? Well, it's distance from its peak, right? But I don't know, man. I'm impressed. Semiconductors I see, AMD I was looking pretty good. Nice little bounce back from Qualcomm. So semis look good. I like the reversal characteristics. I mean, it's really followed with the S&P. It fell further than the S&P, so it's got further to play catch up. I don't know. I mean, so a little bit of relative weakness in tech, but the pattern is similar. And so I think from that perspective, you got to be pleased. I don't know that would inform my trading. I don't know that I would say, okay, I'm going to stay away from tech simply because it is now back in an uptrend. But if you press me on it, yes, tech's still a little bit of underperformance. And then small.
Let's get Matt in here on that one. I
Yeah.
think you want to have a thought on the NASDAQ. Matt, anything you want to add to that analysis?
Yeah, I think you got the NASDAQ and the S&P very, very similar to one another right now. And the NASDAQ is slightly improving its technical condition. The S&P's been very consistent in my opinion. But the NASDAQ, Tyler's right. The further it falls, the more recover now. But the recovery over the last 5 days has been fairly strong against the rest of the market, though. And so you are seeing that catch up a little bit. And the question that I have is, can that recent momentum continue? And I have my doubts. I have my doubts. And the reason I just wanted to bring that up is we haven't even begun to see earnings yet out of the tech space. And so this, to me, we've seen earnings out of the banks. We've seen some earnings out of some energy. We've seen earnings out of healthcare companies. We've seen earnings out of a lot of S&P 500 components. And we've seen, for the most part, the positive response to those earnings. And that has been a catalyst for the marketplace ever since JP Morgan last Wednesday. And so when you're looking at that right now, you gotta be impressed with the catch up. But it's hard for me to be like, the confidence levels building. Technically, I have them very similar, but until you see some of those big name semiconductor companies next week the Apple computers next week, some of those components from an earnings perspective, I kind of feel this is an S&P and the NASDAQ's just playing along with it at this point.
Getting drug upward. Yeah, I think that's probably pretty accurate. I mean, there's so many big names coming down the pike next week that we got a little bit wait on that one.
Well, and you got IBM, right? You got IBM and you got
Tonight.
Intel.
Yeah.
So, and that's tonight and this week. So, I mean, we start to see them, but I wouldn't exactly say IBM and Intel are, yes, they're tech stocks, but they are very value-based tech stocks. And so it's not going to give you the behavioral analysis, I think, that leads to confidence that an AMD will have, or an NVIDIA will have, or something along those lines.
I got you. Very good. A couple of sectors that we've had very, very positive ratings on. Now I want to take a look at them real quick. And then Tyler, I also want to get your read on some of the sectors we've had lower ratings on that now have some reversals developing while you've been on vacation, including healthcare, which Matt mentioned that we've had some earnings reports coming in this week. We highlighted that one yesterday, but look at energy first, XLE, riding the lightning, still very, very healthy. And financials obviously broke out. We had a lot of bank earnings while you were gone, Tyler, very, very healthy as well. In fact, I know the strength in the financial sector has got you leaning towards featuring that in our Jedi Options segment a little bit later in this show, where you're going to be doing some poor boy cover call on a financial company, correct?
Yes, sir. Yeah.
Goldman Sachs, I believe. So we still got the strength there, no doubt about it. But Tyler, tell me what you're seeing in some of the reversal analysis. Look at healthcare real quick. W pattern coming off the lows. You know, Matt highlighted what we were seeing yesterday out of some of the earnings reports. Abbott Lab today. I know Anthem here today as well. Matt's going to be covering during earnings roundup. What are you seeing in that chart, Ty, that grabs you?
Yeah. Well, one of the things that I think that this bull market has either taught you, if it's your first bull market, or reminded you if you forgot, is that a rising tide rises all boats, and eventually these sectors that fall out of favor, they don't remain out of favor. There's just this undying bid beneath the market, and eventually they come back. They being the bulls, buyers, they come back to these beaten down areas, and so instead of just becoming overly pessimistic and like a perma bear, you just have to say, hey, right now they hate healthcare, but eventually they're going to like it, because that's the playbook. That's how this has played out for the last decade. You're just waiting for a reversal pattern. And you got that this week. To your point, here's your double bottom. You know, previous to that, it was making lower lows and it was completely out of favor. But you finally find some support at 125. And more importantly, you break resistance. As we've said recently, holding support is one thing, it's good, but breaking resistance is better. And that's exactly what healthcare did yesterday. So in my mind, S&P recovering this week, I don't think it's a surprise that has been accompanied by kind of a broadening in the market rally, where it's not just leadership from one or two sectors being in an uptrend. I think it's comforting that you're seeing the broadening in the participation, where now you have healthcare starting to be in a daily uptrend. Now you have consumer staples starting to show a spine and stop going down every day. Telecoms don't look as bad. I like the fact that the market's broadening out, and I think XLV is just a perfect example of what you're seeing in a variety of once out of favor sectors that are now coming back into favor.
And maybe a day behind. Another one here today that's given me a very similar read, in my opinion, is XLU. If you look at the utility sector, reversal characteristics building into a breakout. I know we're testing some levels here on both those charts, including moving averages, but you have to love the price action coming up off the low. And, utilities, healthcare, these are traditionally defensive, areas of the market. Or is that just a pickup from the overall market lifting? I think there's some of that, but you have to like the price action here one way or the other, Ty, don't you think?
100%. 100%. Even staples. I know it's ugly, but it was a lot uglier 2-3 weeks ago. So when I left, they were puking up telecoms and staples, and now they all of a sudden like them. So I like it. I like it all across the board.
All right, let's flash into the commodity markets next. Unless Matt, do you have anything you want to add to those reversals in those defensive areas right there? Utilities, healthcare.
Specifically on healthcare, I'll talk about it during the
earnings roundup.
There's a few earnings in healthcare today, so I'll talk about it then.
Couple of nice ones, actually, you bet. All right, let's go through commodities next. Crude oil, riding the lightning, finding Mark's girlfriend, the 9 EMA there. We took about 4 days to do it intraday, but you see that it hit there on the daily chart. We are blasting off. Tyler, a little high base developing here in a very, very nice momentum trend. What's your read on crude?
Look, don't fight it. I mean, ever since you broke out of 75, you've seen nothing but bullish behavior. And quite frankly, even before that, it's been bullish. It has not paid to bet against this crude oil run here. So little grindy at times, but it deserves it after having started this run from almost 60 bucks. I would not want to bet against this. I like the trend. It's not misbehaving at all. So, breakout over 83 is kind of your next short-term trading signal for me.
Yeah, gotcha. All right, gold, silver, copper next, and I'm going to go back on the S&P for a question for Coach Matt. Talk Bitcoin, then we'll get into stock talk. Gold here kind of just stuck in the mud. Coach Matt highlighted the 1800 level now as an updated potential trigger here, but it's going to be pushing towards that 1840 as well. Couple levels to watch here. Nice little candle today, Tyler, but 1800 as a breakout. Are you seeing that there as well as potential?
I am, and what interests me a little bit more in terms of the goings on in gold is gold miners. These look disgusting when I left. They look pretty good right now. So, 100%. I mean, a big turnaround. The theme for me has just been Tyler goes on vacation, all the crappy areas finally get bid up, and everybody's partying when he gets back. I'm impressed by that turnaround in gold stocks.
I am as well. In fact, Newmont Mining, what a Tackle 25 component, very, very good gold mining company on one of our lists. I actually highlighted in Trade Masters last week for the very same reason, Tyler. Once we're catching back above these MAs, you're feeling reversal characteristics. That's where a lot of opportunity is, in my opinion, in the marketplace. So I'm glad you highlighted that as well. And take a peek at silver, one of the industrial metals that gold miners are going to be pulling out of the ground. A lot of these have some percentage of that in silver or other mining components. And copper, Tyler, HG, both improving specifically. Can you give me a quick read on both those charts?
Yeah, I mean, the thing with silver that's amazing is this looked horrific. I mean, this was breaking, let me even go further back here. This was a monster support level, and I'm sure we talked about it at the time, but this $22 level, I mean, when it took that out on, what is that, Sep 29 at the end of September? Look, dude, that's about as bearish as the chart gets. And no, little fake out, went right back up. Nasty little shakeout there. Now you're taking out resistance. Look, anybody who and this has been the case, I think, for a while. Anybody who has been just beleaguered, like, why do I own silver and gold right now? These are completely out of favor. Look, you come back a month later and she looks really good. So I'm impressed by this turnaround in silver for sure.
I agree. Yeah, it's been grabbing my attention from a breakdown back into reversal characteristics, now back above MAs, healthily improving just a little bit at a time. That's what's happening off the bottom of these charts in some of the areas. And I did want to go back on the market for one quick question for Coach Matt. Yeah, copper, certainly.
As far as copper goes,
yeah.
Look, I think that we all like the market better when this thing is strong. You think about when the best gains came in the last year and a half, it was when copper was ripping and the reopening trade was on. And then when it wasn't as fun from like that sector's perspective, this thing had been kind of a hot mess. Couple potential, breakdown attempts. And then finally it comes to a head and you get some resolution to the upside. Very, very pleased to see the global growth trade back on, and that makes me happy.
Yeah, I agree. A couple I just wanted to make sure that we highlighted, got your take on. So very good. All right, back on the S&P for one real quick conversation. And Matt, if you can come on back in here. One thing I saw today, and you're my go-to guy whenever these type of stories hit the wire. I want to call you first and get your take on it. It looks like that $3.5 trillion spending bill that's been in negotiation for what seems like forever. It's not been forever, but it feels that way to me. But it is now coming down. It looks like they are negotiating some of the prices. It looks like a 1.9 trillion package. I saw some people making concessions. Joe Manchin has a lot of opinions about what he doesn't want in the bill. It's covered everywhere. What's your read on the progress of that spending bill, and if it could develop something here as a theme in the market or an impact in the market as well?
Biden's been floating the 1.75 to, I believe, $1.9 trillion price tag over the course of the last 24 hours or so. Manchin has stated he's not been willing to go past 1.5, and I believe Sienna is also within that range. A lot of negotiation tactics are happening between the Democrats from the more the the blue dog Democrat, the conservative Democrat versus the progressive Democrat. And so it's going to be interesting to where they, if they do settle on a final price tag, but it does look like those negotiations are seeing a little bit of positive tailwind right now. It does look like there's been some concessions from the progressive side of the Democratic wing. Two of them, number one, and this is kind of cutting out of that 3.5 trillion utility renewable energy plan, I believe, which is a plan to basically foster utility companies embracing renewable energy sources. And I believe free community college, 2 years of free community college is also off the table at this point. So they are negotiating. I do believe this is a market story, but I don't believe that this is part of what is happening in the market right now.
100%.
I really see this as earnings being the catalyst, and I really see this as technically the market showing its cards. This was happening well before this news started coming out. I think it can be a positive tailwind, though, because there's been a lot of chatter over the last couple of weeks that this is not going to get done. So I do believe it can be one of those positive tailwinds that is like the cherry on the top. Say, hey, yeah, if we were hesitating, let's stop hesitating a little bit. But I don't think it has much to do with the current market condition. I think it can be one of those tailwinds that really adds to the seasonality analysis.
Yeah, it just felt like progress to me. I mean, I've seen negotiations between politicians enough to see those numbers start getting floated back and forth, and then they start coming down into a more general range. Feels like progress, man.
And we've seen negotiations in politics that were a lot worse than this one too. So it'll be interesting to see if they do come to a final price tag. But it does look like there's progress going into that. The market's gonna. Whether or not you agree with it personally, the market always likes free money, guys.
Yeah.
Like if there's one thing market participants like more than free money, I don't know what it is.
Earnings growth, maybe.
No,
not even the fundamental strength.
The hypothetical, what some company hypothetically says they're going to do in the future versus the Fed saying, here's 120 billion real money right now.
Liquidity is a huge thing.
You can have 140 hypothetical $1 billion in 2 years from now, or I can just give you 120 today.
You know, it's a really good argument. You know who else makes that argument consistently? Whenever I talk to him is our godfather, Coach Keith King, who's been a mentor to me and you. And he always talks about market liquidity, what's going on with the Fed and all those type of things. In fact, you said over the years, do not fight the Fed because that's always the first step. But positive development on the political front.
No, you punch up, but you don't fight them.
No, don't fight the Fed. You punch up plenty. In fact, we had some team tackle members yesterday saying, hey, we would love Jerome Powell to come on this show. It would be
I would too. Jay Powell, I'm your friend. Come hang out with us. Let's have a talk. I'd like to debate monetary policy with you, brother.
I agree.
Friendly conversation. Just a very old school friendly conversation here.
There would be a line on how long he lasts till he disconnects.
He would have technological issues within 30 seconds.
Problems. Yeah. Oh, sorry, guys.
I don't think he would like my first question.
I've got a request from Team Tackle here, and I'm not going to bypass it because Jeremy Johnson been here for a long time. Jeremy asked us to take a look at platinum. We were looking at 100%. Silver and copper a minute ago here. Tyler, can you give me a read on platinum?
Yes, sir. I mean, so this is a good example of a trend reversal. Looked like garbage a month ago and put in a higher low, broke the 50, had a breakout, put in another higher low, another breakout, basing sideways, right above a rising 90 MA. It's a very clean pattern. I think if it breaks 1,063, you got a clean shot to the 200 MA, 1,100. Yeah, it's a nice little setup.
I agree. 1060 looks like a resistance level, and 1063.64 looks pretty solid. It opens up pretty clear above 1063.64 though. There's not a lot of resistance levels up until that 200-day moving average. I do think you gotta like it, especially since it's been behaving a little bit better than some of its counterparts recently, and so I do think you got to respect that as well. But again, you got to like the openness between that 1063.4 level and that 200-day moving average. I do want to play the game though. Would you rather game? Okay.
Ooh.
Yeah. We're going to go with We're going to go with all metals. Okay.
Okay.
All metals. Let's do rapid fire style. So give me gold very quickly. And we're not going to do detailed analysis. Just play the game. Okay. Gold, silver, platinum, palladium, and copper. Here's your time frame. Short-term swing trade. 3 to 5 days. Quick swing trade, 3 to 5 days, and you are carrying through the weekend.
That is an interesting question based on the way that you clarified that, because I was going to lean somewhere else. I'll go first.
Not position trade.
No, it's platinum.
Because I don't think Jeremy's question is to a position analysis. I think he's looking short-term analysis. All right, and Jeremy, correct me if I'm wrong, but the question did lead me to assume it was a short-term analysis.
I think so as well, and he can correct us if you're wrong as well. But for me, the debate comes down to copper breaking above 4.8. It depends on how you see that tail back there. I got to think about that, and platinum on the reversal, because the daily chart on platinum has a clear path above that little resistance level that's been building into a high base. Man, momentum on copper, the platinum trade to 1100. They're both really good. I'm going to say short term, I'm going to just get a coin flip and go copper. I like the high base breakout above 4.8. So my answer is copper. Tyler, what about you?
I thought you were going to stick with platinum. I would have gone copper too. I just think I like the relative strength there versus the hope that the bottom in platinum continues.
Those two have good triggers in front of them.
I'm going to disagree. Mm-hmm. I am. I'm going to stay on platinum here. I think a couple things. Number one, I like the support level on platinum a heck of a lot more than I like what is building on copper. I think copper needs a little bit of time to kind of smooth out the volatility. I think you've had that time on platinum here. If you look at last week's high versus this week's low, you're going to see a old resistance zone intraday coming into a new support zone intraday. You start to see the buyers come in right there south of that 1040 level. You got a clean trigger above 1060, 1064, open air until you really get into that 1100 level. I don't get me wrong. I'm with you on the multiple time frame on copper too. I just think in the short term, there's some volatility in copper right now. There's a little, and you are overextend to the top side. I like the reversal analysis here in platinum, and I like the open air between 1060 and 1100.
Does Jack Ma invest in copper?
I don't know. He was in Europe. So.
He was in Europe this week. Maybe he's buying natural gas futures in Europe because they went down. I don't know.
Dude, he's secretly negotiating with Putin on oil contracts. Who knows? Jack Ma is a fascinating character. And I think he's even more fascinating after he left Alibaba.
I agree. Yeah. And by the way, Jeremy, appreciate you asking that question, because that platinum chart is looking really good. And there's some analysis there, Matt, for sure. That's a good question. Good debate. I don't have any problem with a disagreement here because they both have different kinds of opportunities.
Yeah.
All right, let's roll. We got to look at crypto. Tyler, BTC, since you've been gone as well, the crypto markets have gone absolute gangbusters here the last 7 days. Had the first official ETF trade on the stock exchange yesterday, BITO. That's not what is happening in crypto, though. It is just a blast off trend. We're breaking above the highs. Tyler, how do you read the chart here?
Look, I read the chart like any person who can see. And that is the blast off, man. Come on, this is impressive. What has Bitcoin taught you so far in its short life? It's taught you that you do not fight against breakouts. This has been a very good chart with respect to giving you follow through on breakouts. And when the downtrends end, they end, and then it goes higher. I mean, I honestly wish I had a time. I mean, we all do. I wish we had a time machine. But look, I'm so impressed by when it stopped this little downtrend here. It's like, okay, screw it, 40K to 70K. Such an impressive move. And the thing is the higher it goes, the more eyeballs it gets, you get more adoption. You can make a very bullish case that this is more bullish at higher prices than it is at lower prices, or better buy at higher prices than at lower prices, just because of the momentum it exhibits. Volume is exploding. You now have a futures-based ETF to play with. Yeah, I just like it on all fronts. I mean, it's going to stay volatile. It's not going to go straight up as we know, but Dude, come on. It's an all-time high. It's impressive, and it's got a ton of momentum right now.
100% momentum is there. The trend is there. You are absolutely in blast off the last month or so, Matt. Now we are breaking into a new all-time high on Bitcoin. It's really impressive. Anything you want to add to it, Matt?
No, very impressive. You just broke out of the all-time high. You're overextended. That like I would love some consolidations for some better, as a swing trader, more swing trade opportunities. But I still think this is a day trading in a quick, very aggressive swing tradable instrument right now.
Yeah, holders
And
are happy.
that's going to stay until the intraday changes to the daily chart. Right now, all the analysis is done on the intraday charts.
Yeah, I'm with you. All right, let's move into stock talk here. Whenever we round up the big market Skyline items, we always go into stock talk and break down individual company stories. If you're out there and you are watching our show right now, a couple things that I would invite you to do. Number one, click the subscribe button, click the bell, and come and join us on this show each and every day. Markets are live. We go live 12:30 Eastern. And if you're Team Tackle or if you're watching the show right now and you like it, give us a thumbs up. Help us get the word out. Get the analytics out here on YouTube because we're pushing 20K subscribers. And I know we're going to have a special event next week regarding that. Tyler's going to be teaching more info on that to come in the next couple of days. But let's get into stock talk right here next. And Matt, there's a couple stories I want to cover, but nothing more important than earnings season right now. So where do we want to start with earnings roundup? Because there's a few names definitely on the list, Netflix, Anthem, you name it. But where do you want to start?
Well, I think you got to start with the big dog of them all today, and that would be Netflix here. Tim, do you have subscriber numbers?
I do.
I didn't write down the subscriber numbers. So let me go through the raw numbers very quickly. Then we'll take a look at the subscriber numbers. Then go to Tyler for the technical read here. Netflix comes in with a very impressive EPS number, 319 versus the expectation of 256. That is an extremely good beat from an EPS perspective on Netflix expectation. Revenue came in line, 7.5 versus the 7.5. That only represented, and I do mean only represented, 16.3% yearly increase in growth. Now, Netflix is one of those growth-based companies that routinely hits 30, 40, 50% type growth numbers. That's a little concerning. Context matters. Last third quarter was really, really, really good for Netflix. So kind of the metrics, how we've been talking about, like, for example, United Airlines today, 211% revenue growth year over year. Well, what's the context? The context is they were shut down last year. This year, they're not, right? Well, when they were shut down last year, well, that was really negative for United and a lot of other companies like that. Well, what was it a positive for? Companies like Netflix, right? That the stay at home. And so there's some context there, but it is only 16%. But the concern here from a raw numbers perspective is they got a slight lowering of EPS guidance for the fourth quarter. And so you have some positive, you have some negative here from an actual raw number perspective. The subscriber count, Tim, you have those numbers?
I do. As a matter of fact, subscriber for the quarter was higher than expectations at 4.38 million new streaming subscribers. The company had forecasted 3.5 million. Street estimates were about in line to that. And total global subscribers did go up to 213.5 million, up from 209. The 4.3 being added, obviously, is what added to that. And they attributed a lot to their original content. They talked a lot about Squid Game, and they were really impressed with the impact value and all that kind of stuff. But
they hold on. I just want to make one quick snarky comment about Squid Game.
Yeah.
So they cashed in 7.5 billion in revenue.
Yeah, they did.
And Squid Game is accounting for more than 20% of that.
Listen, there's some easy jokes around the impact value conversation.
The numbers don't add up, Squid Game. They don't add up. Just saying 2 + 2 = 4. Netflix is trying to tell us Squid Game is 2 + 2 = 14,000. Not necessarily true, but I think you got some good. You got some kind of concern. I don't want to say bad. I don't see a bad in this report. You got some good. You got some lukewarm. You got some net neutral. Obviously, a little bit of a muted response technically. I would have expected, if you were to tell me this was the report yesterday, I would have said 600 makes a lot of sense on a gap down. Right? But not the case. Found the 20-day moving average. Buyers are coming in at support again. Tyler, what's your technical read here?
Yeah, I agree with you. I think given the run up it had, remember last quarter, this thing was $500.
Exactly.
If a stock wants to run from 500 to 650, have a okay earnings and go down less than an ATR, like, come on, sign me up.
And what was the market maker move? 30, was it 33?
It was about 6%, $33,
Yeah,
something like that.
Yeah.
So essentially a very muted response, right?
Mhm.
Like did not move near as much as it could have and didn't do any technical damage. Maybe it's because the market backdrop's so healthy right now. Maybe this would be different if the S&P hadn't returned into an uptrend, but I don't know. I'm impressed. As long as it holds a 20, it maintained its integrity. I think you break the 20, then it's like, hands off until you get a recovery and a breakout over 640. Really, that's at this point, that's your next trade, is if it can recover from today's down gap and give you a nice upside breakout.
Well, and Ty, I've seen this a few times, and we're still early in earnings season, but you take Netflix today, you take Kansas City Southern, Kansas City yesterday, KSU. KSU's report was not a good report, in my opinion. It was even worse than Netflix. But there was no sell despite a run-up. Netflix, mixed report. But again, given the backdrop of the run-up, you would anticipate a little bit of a profit taking, doesn't even violate a support level.
Yeah.
Earnings is providing a little bit of thirst here. And it's going to be interesting to see if we can get through next week specifically, because next week is when you start getting into those big time names, Apple, Microsoft, Amazon, those types of names. Netflix today, Tesla tonight, or coming through the next 24 hours. We're starting to get into the heart of earnings, and that early indication that earnings was being a catalyst has not seen any cold water so far.
Mm-hmm.
So far, we're a week into it, maybe a week and a half into it, but the market is showing you a little bit of thirst here, and I think it's impressive.
I agree. Yep. Yeah.
All right, let's move on. Let's talk healthcare. Actually, no. We just talked Kansas City. Let's move into the Canadian railroad. Let's talk railroads more. It's like Monopoly. You just want to own the railroads right now.
That's right.
Kansas City's being very resilient up at that 300 level. Keep an eye on that chart, by the way. Kansas City Southern. Look at that high base 300 type price threshold. CNI here today, though, Canadian National Railroad gapping up above known resistance levels on the backs of a fairly decent report, coming in at 121 on the EPS number. The expectation was 112. Revenue came in line at about 2.9 versus 3 billion. That represented 11.5%. Why the gap up? Because the raw numbers are, it's a railroad company. The raw numbers are,
Mm-hmm.
Here's an increase in guidance coming out of Canadian National Railroad. So we're seeing an increase in guidance here, and you're seeing the gap up. Following that, technically, there's no trade here, Ty, but do you see anything that maybe could develop? And if not, just say, move on.
The hard thing is when you look to the left of the chart on Canadian National, I just can't find a good, clean trade. And it's just a tough stock to trade. You can invest in it, but there's so many better fish to fry. I would pass.
I agree. But again, you are seeing something in the railroads recently. And so I would keep an eye on those railroads. You're looking at United UNP up against the all-time highs with a lot of momentum. Kansas City Southern up against the highs. Canadian National breaking out. Just again, I agree with Tyler 100%. Canadian National Railroad is not a great tradable company, but you're seeing a little bit of appetite here. Keep it on your keep railroads in the back of that mind as they navigate some of these momentum trends here.
And one quick point on that, Matt. It's not just railroads right now. Railroads are grabbing my attention. I'm glad you've highlighted them the last week. Transportation in general, some of the shippers are looking good. The trucking company, CHRW, had a good report last week, I believe, but they've been blasting off as well. The transportation index is looking good. Railroads are kind of leading some of that right now, Matt. Yep.
Well, and again, we haven't talked about the $1.2 trillion infrastructure bill, which certainly would pass if the Dems do agree on some type of social plan as well. And that would be a big catalyst for infrastructure in general, in my opinion.
And let me correct one thing I just said. I said CHRW. I meant JB Hunt. JB Hunt had an incredible report last week and blasted off. All right, very good.
CHRW, I think, is
next
to
week.
report. Yeah, to report.
All
right, let's move on to the healthcare space. We got quite a bit of companies to discuss here. I'm going to do this rapid fire style. Johnson & Johnson kind of kicked it off yesterday. We saw that price movement coming into the 200-day moving average. Let's move on to ISRG, and let's talk about Intuitive Surgical here. ISRG comes out at 119 versus 117. Revenue comes in line at 1.4. That represented 30% increase in revenue year over year. Technically, Ty, what do you see? I'm just going to give, and Ty, I'm going to give numbers fairly quickly. You give me your technical read, then we'll discuss healthcare in general.
I like that it had a 3-for-1 split. This was a really expensive stock.
It was.
They should have done 30-for-1 or something. Like it's honestly, just side note here, but dude, if your stock price is 1,000 and if you're going to split, it's almost like if you're going to split, do a split, right? Take it sub $100 or something. That said, I like it. I mean, I'm sure this looks great on a weekly chart. Little double bottom. Give me a breakout over 345. Looks good.
Yeah, I agree. And it's, you see that post earnings at that 50-day moving average, and obviously you'd like to see it close above that. And that would be weekly confirmation on that as well. So keep an eye on that. Let's move on to the next healthcare company. Let's talk a little bit about, and all three of these next companies, guys, and this was something we're seeing in healthcare right now: increased guidance, increased guidance, increased guidance. Now, guys, why that's so important is guidance was one of the biggest questions coming into earnings. And so far, we've had pretty decent EPS. We've had pretty decent revenue numbers from for the most part. Guidance, however, has not followed suit. Last week in the S&P, you had 3 companies lower guidance. You had 2 companies increase guidance. Just today, we've seen a couple companies lower guidance. We'll talk about, we talked about Netflix. Netflix lowered guidance. They lowered their EPS guidance for the fourth quarter. United, we'll talk about United Airlines here in a second. They lowered guidance. But so the trend I've been seeing through most sectors so far has been a slight adjustments of guidance to the downside. Healthcare coming off the lows following what we saw with Johnson & Johnson yesterday. It's actually these 3 companies that we're going to be talking about all increasing guidance, bucking the guidance trend a little bit. Let's talk about Ant-Man. Poor boy covered called darling from Tackle Trading. Ant-Man here. It's actually Anthem, but Coach Frank likes to refer to it as the Ant-Man, so that's kind of what we do as well. Anthem here breaking out of $400. That weekly chart looks strong on that breakout of 400 as well. Looking forward to Tyler's read on that. They come in at a whopping $6.97 a share. The expectation was $6.35. Revenue came in $35.8 billion versus the expectation of $35.3. That resulted in about a 15% yearly increase in revenue year over year, and like I just mentioned, had a slight increase in guidance. Tyler, technically read here. What do you got on Ant-Man?
Gorgeous, man. It's gorgeous. This reminds me of our beloved phrase: the longer in base, the higher in space. This is a long-term base. Spent 2 quarters hanging out after a really nice rise in March and April. So I would not be betting against this. And to your point, the weekly chart looks gorgeous. I like the pickup in momentum this year.
Yeah.
It's been 2 years doing a whole lot of nothing, and I like the increase in momentum. It's a really pretty chart. I like it a lot.
Yeah, and Ant-Man's had a couple growth charts time periods over the course of the last year and a half, but man, when it trends, Ant-Man can trend pretty smoothly as well. Keep an eye on that. Next, excuse me. Next, let's talk about Abbott Labs, ABT. Abbott Labs comes in today with an absolute destruction of EPS. They came in at 140 versus the expectation of 92. Revenue comes in hot as well, 10.9 billion versus the expectation of 9.5. Revenue year over year, 23.4%. Once again, slight increase in EPS guidance, very similar to Ant-Man. Technically, you're not seeing any major violations. It's kind of within the range. But again, I do believe Abbott Labs, one of those major components in healthcare. more about the healthcare space solidifying itself than Abbott Labs itself, just because the technicals are very mixed here. Tyler, do you have a different read here technically?
It's tough. No, I
Yeah.
don't. Gap, and then it's kind of stalling. I think you need to give it a little bit of time. For sure.
I agree. Let's move on to Biogen, pharmaceutical giant. They come in at $4.77 a share versus expectation of $4.15. Revenue comes in at 2.8 versus 2.7, and they also did an increase in guidance. Not a lot of love coming into Biogen, as their revenue only goes as their revenue. One small point on Biogen here. Their revenue actually decreased year over year. Abbott Labs, Ant-Man, and even the ISRG before that, 30% increase in growth, 15% increase in growth, 23% increase in growth respectively. Here's Biogen, negative 17% from a growth perspective. But even at that, still maintaining support levels. I don't see really anything here on the buy side, Ty. Do you have a different read?
No,
I did. I thought so. I just thought I'd ask.
It's an easy one.
It was certainly an easy one. Let's move on and let's talk a little bit about industrial airline company United Airlines here. We've been talking a little bit about some good positive numbers coming in from an earnings perspective, and now let's talk airlines. Airlines, we all know the context of the story around 2020. We don't need to repeat that. United Airlines, once again, posted negative $1.02. The expectation, though, was a negative $1.65. So they're not as bad as they were, I guess, is the positive way of approaching that.
Is that the spin? Right.
That's the spin. That's the spin. But they don't need to spin this number. They came in at 7.8 billion. The expectation was 8.6. That 7.8 did represent a 211% increase in growth year over year, but more negativity coming in, they lowered guidance. So a lot of concern over the guidance number. Revenue exploded, but again, when you come from nothing, it's easy to explode higher from a percentage perspective. The concern here is lowered guidance. I think the market's got it right. Not a strong sell, but there was not a reason to buy United Airlines post on this earnings. I think the market has a right little bit of fade down, maybe even come down to test those lows. We'll see it at that point. But as of now, I think the market has this one right.
Yeah. Yeah, and there's nothing in that chart. I mean, that's a breakdown below a pivot. Now you're back into neutrality at best.
Okay, next, let's go into Baker Hughes, energy component. Baker Hughes here. It comes in at BKR. They changed. They at one point did a Facebook. We need to change our imagery around our company, so we're going to rebrand. They did that trick at one point. Now Facebook's going to do it. The question is Facebook going to trick anybody that they're not Facebook any longer?
I know, right? Come on.
I kind of think they have brand awearness a little bit. Baker Hughes comes in, though. I had to take a shot at Facebook.
Of course.
Who knew I could fit a shot in Facebook when we're analyzing an energy company? But, that's how it goes. Baker Hughes comes in a little bit of concern. And I think a lot of energy traders are probably saying, I hope this is not indicative of what is to come in the energy space. And I don't think so. So we'll have to wait to see some of those bigger names report. But Baker Hughes comes in at 16 cents. The expectation was 22. Missed there. Revenue 5.1. 5.3 was the expectation. Missed there. Revenue went up 0.9% year over year with energy with crude doing what it's doing. Just simply not good enough. Sell has it right. This is a stock that's appreciated quite a bit, 18 to 26 over the course of the last quarter. Got to show up on this one. Baker Hughes didn't show up. Market's got it right. This is a sell.
Yeah, that's a direct candle. Sell all day long as well. I mean, it moved and then it's been selling since the cash open.
If you're gonna go up, what is like 19 to 7 against? What is that? Like
that's about 35%
or something like that.
Mm-hmm. Yeah.
If you're going to go up 35% in a quarter, you got to beat something.
Yeah.
Yeah.
Right. You got to beat one EPS guidance or revenue. You got to beat something, and they beat nothing.
They beat nothing. They're giving back 7% of that.
They honestly, if I was going to give it an NFL analogy, I would say they acted like the Miami Dolphins today.
Couldn't even beat the Jaguars.
You can't beat the Jags.
No,
Can't beat the Jags.
No.
If you can't
All
beat the
right.
Jags, you have no reason to be up 35%. That's how it works.
There you go. That's fair. That's fair. You still feeling bitter from last weekend?
I'm not happy.
I'm
not. The Jags hadn't won a game in 20 games in like 400 consecutive days, and Miami's like, but we're here.
That's funny. All right. All right. They'll turn it around. They'll turn.
Oh, I've been saying that since Dan Marino
Stay
retired.
positive. All right. Any other earnings roundup there, Matty?
Oh no, that was it for me on earnings roundup, guys. We
All
got
right.
more. We got more coming down the pike here tonight, though. We got Las Vegas Sands. We got who else? We got Big Blue,
Tesla.
but the big dog. We got the big dog. The big dog's Tesla tonight.
There's nobody more important than Tesla. Obviously, we want to see the price response.
Does anybody have to say it? Like, you gotta beat something tonight, Tesla.
You got to beat, but remember with Tesla, you got to hear the conference call as well.
Okay,
There's
okay.
always fireworks on that.
Just to clear, I wasn't talking about Tesla. You got to beat the numbers. Elon, you got to beat the algorithms. Those words matter, Elon. Show up tonight, Elon.
Yeah. What was the new trick?
Put your positive spin on Elon. No anger. Anger.
Dude, all you got to do, Elon, is talk about how supply chain disruptions are not impacting your forward guidance. That's the new trick.
And Tesla's numbers lately has bucked that trend.
They're
bucked that trend. And all you have to say is, guys, we've been bucking that trend last quarter. We're bucking that trend this quarter. Just think about what we're going to do. Supply chains, that only impacts Ford and GM. That's all he's got to say.
Yeah,
I'm with you.
I guarantee. Well, we're going to hear about Chinese auto sales and what's going on with their German factory and their new Austin factory and all that kind of stuff. Want to see the numbers? Want to see the price response? I'm excited about this.
Man, though, I got close to being accurate on that 900. I got close.
Yeah, it was close. We had a nice little run up in there.
Yeah, profit take a couple of days, really?
Yeah, I'm not crying over it.
No, I kid.
All right. Last one, actually, one story I did want to cover before we get into Jedi Options. We got a fun Jedi Options, an educational one planned for you here today around Goldman Sachs doing a poor boy covered call. But Matt, you did mention Facebook. I just want to give the news so people know exactly the context of what we're talking about. Facebook next week is supposedly going to rebrand their company name. Now, they're still going to keep Facebook as a product in the company, but similar to what Apple did with Google and all their suite of products, they're going to have a new name. We don't know what the name is, but apparently Zuckerberg wants to have a name that reflects his ambition for the metaverse, that he wants to build moving forward and his vision of the future and all this kind of stuff. Most people are going to see this as PR spin from all the negativity they've had over the last 6 months.
Most.
What is your thought on this?
Can we just say everybody, like everybody's going to see this as PR spin?
There's 10,000 people that will not, and those are the engineers that are going to be hired by Facebook to build the metaverse.
They're going to build the metaverse. Okay,
that's exactly right.
Facebook, you've been watching too much Marvel, bro.
I agree. Sorry, I should just laugh this off. This is vision of all right, I'm done.
I mean, the overlord is he's buying into his nonsense too much.
After the show, I want to sit around with the coaches and speculate on what the new Facebook name will be.
Oh no, I've already begun the speculation in my head, and the names I've came up with, I cannot say publicly a couple of them. And they're historically driven organizations. I'm just gonna.
All right, we'll see what it comes out as. We'll cover it as we go. Let's move on, and let's move into our last segment here on a Wednesday. And so one that we, have been doing now for a couple months, one that I really, really like is called Jedi Options. If you asked me to describe Coach Tyler Craig, I would have a lot to say about, his character, his person, who he is as a coach, as a mentor, as a father, and a leader. But when it comes to education, he's an options educator that is one of the best I've ever known in the marketplace. And so we asked Tyler to highlight some option concept each and every Wednesday, teach it to our audience out here on our YouTube channel so that you guys can learn more about the options market. And so he goes through strategies or theory or whatever it is that's grabbed his attention that day. Tyler, what you got for us here today on Jedi Options?
Yeah, thanks, Tim. The title of today's Jedi Options segment is Banks and the Poor Boy. I was thinking about banks when I got back from vacation, and it's one of the sectors that looks the strongest right now. And it's one of the sectors that has been benefiting from what's going on with interest rates. So I want to do a little introduction to how banks make money, why what's going on in interest rates is a tailwind or supporting banks right now, and then how do I make money off of it, specifically using a poor boys covered call strategy. We'll see if I can get to all that here in my my segment. So let's go. I'm going to start with a picture here. If actually, I'll show you how to find this stuff. Okay, I'll teach you how to fish. One of the things that comes into play with this explanation on banks is the yield curve. If you just go to Google and you Google U.S. Treasury yield curve, you will get directed right to the Treasury Department's website, treasury.gov, daily Treasury yield curve rates. And you can see the history of the last month or so. But at the bottom, that's today, October, actually that's yesterday. So they don't post it till the end of the day, but it's close enough. It doesn't move that much day to day. What this allows you to see is the different interest rates on U.S. Treasury debt that matures at varying maturities or varying dates. And you can see that the 1 month T-bill, 2 month T-bill, 3 month T-bill, 6 month, 1 year, these are all like zero. Okay, so short-term interest rates are effectively zero. And that has to do with Federal Reserve policy and what we know as ZIRP or zero interest rate policy. Short-term rates have been zero for a long time. That hasn't changed. What has changed a bit as inflation has reared its ugly head this year, as economic growth projections have come back after the pandemic, is longer term interest rates have gone up. And so where you see that is as you look out to like a 10-year, and I say go up, like are they high? They're not high relative to historical norms, but they are higher than what they were, say, last year at the same time or 18 months ago. So like the 10-year yield is trading for 1.65. And that is a fair bit higher than what it was 18 months ago. So these longer term interest rates have crept higher. And that also may not seem very high because 1.65% is not that high, but relative to other countries, the US does have a higher long-term interest rate. So when you plot this over time, essentially you could look at, say this is 1 year. Here, this is maybe 10 years, this is 30 years. So the horizontal axis is time, and then the vertical axis would be the interest rate, right? The interest rate. And so essentially, if you take each one of these interest rates and you plot them on the curve, or you plot them on this table or chart, you can then connect the dots and have a curve. So anything close to today, right? So this would be like today, would be around zero, right? So short-term stuff is around zero, and then it doesn't really lift off till like after 1 year, because that's when the Fed is expected to start lifting rates. And then you'll see it goes up, gradually over time, right? So this is kind of the yield curve. Now, it's compressed a little bit because of the way I drew it. It makes it look like it's going up a lot, but just keep in mind the scale on the left here. So what about banks? What does this have to do with banks? Well, banks make money in large part because they borrow money from you and me, and they lend it out to people for mortgages and auto loans, and business loans. So essentially, when they borrow money from you and I, they pay us a little bit of interest. So what we do is we say they borrow at short-term rates. So borrow short-term. Because when you put money in a bank, they pay you a little bit of interest in your savings account. Now, these days, that interest is effectively zero. So they're essentially borrowing money from you and me for free. And then they lend it at longer term rates. And so when they create a loan, typically it's not a 1 month loan. Typically it's a 5-year loan or a 30-year loan. And the profit they get from that is linked to the interest rate that they charge. And so when you see a large discrepancy between short-term rates and long-term rates, the difference between the two is straight towards the bottom line of the bank. Okay, and that's known as net interest margin, net interest margin. And it's one of the main ways that banks make money. And so what we have here is a situation where short-term rates have not gone up, again, in large part because the boot of JPAL, this is his boot. He has his boot on short-term rates, okay? Short-term rates are effectively zero until they decide to lift them. But long-term rates have started to rise. And so as short-term rates have stayed low and long-term rates have risen, the spread between the two has widened, and that goes to the bottom line, or the revenue or profits of these banks. So good for banks. It's good for banks. Now, if you want to see this, TNX is the 10-year yield. And if you look at this, say, a couple years ago, this during the pandemic was basically 0.4%. Okay, now it's 1.65% almost. And so 1.65 doesn't seem like a lot, but relative to where we were last year, it's a significant rise. And that, in large part, is why banks are doing so well right now, right? So rising long-term rates are doing well. And so if you were to be a trader of bank stocks, you'd probably want to keep track of that 10-year yield chart. You'll find there's a very strong correlation between the two. As yields go up, generally banks go up as well. And certainly we've seen that this year. So if I want to profit from that, if I think the economy continues to recover, if I think that interest rates, specifically longer term rates, will continue to be somewhat neutral to bullish, then one way to capitalize is to do a bullish trade on banks. Now, there's a variety of different ways you can do bullish trades on banks. You can buy the bank ETF, or more specifically the financial sector ETF. XLF is a $40 little ETF here. It's up about 4 or 5 days. Obviously would have been nice to have already been in the short run here, a little bit extended, but I still like trades on XLF. What I'm interested in illustrating today, however, is a specific option strategy near and dear to the heart of cash flow traders, known as the poor boys covered call. It is an alternative to a traditional covered call. And we actually have a list over at Tackle Trading. We have a list of stocks that we think are particularly good candidates for a poor boys covered call. It is part of our Tackle 25 system, where we've compiled lists each year that we update that are good for dividends, that are good for traditional covered calls, that are good for poor boys covered calls. And the ones that tend to be in the poor boys covered call watch list are expensive stocks that might be cost prohibitive for those trying to buy 100 shares, such as Goldman Sachs. Goldman Sachs is a investment bank, very good one, make a lot of money. Look at their earnings per share here: $15, $18, $12, $15. Go find another company that has dollar figures that big from an EPS perspective. There's not very many. Now, $400 stock. I want to be bullish on banks for the next few months, maybe even longer, but I want a cash flow type of play that's similar to a covered call, but won't require me to put up 4,100 or what would that be? 41,000, 100 shares of this is $41,000, outside of the price range for most retail traders, I would say. And so what I'm going to do instead is I'm going to build a poor boys covered call. Now, if you want to know if you've done this proper, if you've built the trade right, what I would do is I would build a regular covered call first. And then I would contrast the risk graph of the regular covered call to the poor boy covered call. And if they look somewhat similar, then I did a good job of creating a substitute strategy. If they don't look anything alike, then you probably didn't structure the poor boys covered call very well. So with a traditional covered call, it's a good time to talk about this because we're 30 days from the front month, November options. If I were doing a traditional covered call, I would typically buy the stock and sell like a 30 to 40 delta call option. I'm going to split the difference and go with this 36 delta. Actually, no, I'm going to go with the 30 delta, the 29.5 or 30 strike, not 30 strike, 30 delta, 425 strike. I'm going to right click and go to buy covered stock. Okay, and covered stock is Thinkorswim lingo for covered call. And if I right click and analyze that, it's going to bring up a risk graph that looks identical to a covered call. And so essentially with this, I'd want the stock to get up to 425 and I could make almost $2,000, which is about a 5% return. Not bad, but I got to put up 40 grand to do this outside of really the price range I want to do here. So instead, even though I love the risk graph and it matches my mildly bullish outlook on Goldman Sachs, I want it to be cheaper. So with the poor boys covered call, the easy part is you still sell the same call option. I sold the November 425 for the traditional covered call. I would sell that for the poor boys covered call. So we'll start there. The difference is you're not going to buy the stock. It's too expensive. So in lieu of buying the stock, I'm going to buy a longer term call option that hopefully behaves like the stock, that is a good proxy for the stock. If you buy 100 shares of stock, you have a 100 delta. If instead you were to buy a 100 delta call, which is like deep in the money, that would be a perfect proxy for the stock. In other words, deep in the money calls behave like long stock. The problem is to get 100 delta requires you to pay a lot. So it turns out you don't have to go that far in the money to get a call that's good enough or that behaves close enough to long stock to be a good proxy. Turns out you could buy a call option that maybe has an 80 delta or a 70 delta. And you choose how high you want the delta to be, but just know the closer to 100, the more it's going to behave like stock. You can really use the risk graph to know if you're close enough. Because Goldman is quite expensive, I don't want to buy an 80 delta call. It's going to be pretty expensive. I want to buy maybe something more like a 60 delta, maybe even a 65 delta, and I think it'll work out okay. Now, I've got to buy at least December because I'm selling November against it. You know, long term is longer than November if November is short term. So if I'm selling November, I got to buy at least December, January, March, et cetera, et cetera. I personally don't like to go way out in time because it costs more and my return on investment isn't as good. So I'm actually going to amp up the leverage a little bit, maybe just do a 1 month trade here and buy December, sell November against it, and then maybe be done in November. So it'll be a 1 month trade here. So looking at my December options, if I go to maybe a 60 delta, it's going to cost me $2,000. Well, 2,000 is better than 40,000. I've cut the cost by like 95% here. Could you buy a 65 delta? Sure. Could you buy a 70 delta? Sure. But you're paying $400, $700 more. If I can make it work with a 60 delta and get a nice risk graph, I think I'm going to be okay. So this is the one I want to buy. I want to buy the December 400 call as a substitute for the stock. So control click, buy the call. Net debit, net cost going to be about $15.90. Way cheaper than the traditional covered call. Is it good? Is it an okay structure? I don't know until I look at the risk graph. Of all the strategies we teach, many of them you can get by without a risk graph. I would argue that when you start doing calendar spreads or diagonal spreads, which is what this is, that you need a risk graph. So I'm going to analyze this and look at it on the chart. Now, for me, when I look at this risk graph, it looks awfully similar to a covered call. And I can toggle back and forth. I can say, well, here was the covered call. Okay, so kind of a 45-degree line here, capped at 425, can't make any more money. Poor boy, diagonal line, capped at 425, can't make any more money. Looks pretty similar. I don't think there's any reason for me to fiddle with this structure. I think it's fine. Now, how much money can I make? At 425, I can make, looking at the blue number here, around $1,100 bucks. Call it $1,100. Well, making $1,100 on $15.90 is ridiculous. Okay, $1,100 on $15.90, it's like a 70% return. The covered call was giving me a 5% return. Okay, this is giving me more like a 70% potential return. Now, the ROI is pretty juicy because of the way I structured this. I bought a cheaper call, 60 delta instead of 80 delta. I bought December instead of buying March of next year. So I purposely made it a little bit cheaper to juice up the ROI here. I would have been satisfied with half this much. But I think it's a well-structured play. It gets me neutral to mildly bullish. And if Goldman can work its way towards 425, I mean, come on, that's well within reason. In fact, I'm only 1.5 ATRs away from that. Goldman moves 1.5 ATRs in the next 30 days. I could potentially make upwards of 60, 70% return. That's pretty good for me. And that is a poor boy cover call on Goldman Sachs. 30-second summary. Banks have been very bullish this year. You can thank the the same thing that everybody thinks, which is the economy reopening, but also that rising longer term interest rates, which is expanding their net interest margin. That works to their benefit. I like Goldman Sachs as one of the ways of playing banks. Poor boys covered call, I think, is a good match for that stock. All right, end of lesson. There you go.
Coach Tyler, thank you very much for that Jedi Options lesson. And I'm a big fan of poor boy covered calls. The positive theta allows you to get exposure with a reduced cost where you still want to do cash flow strategies. And for a stock like Goldman Sachs up at the $410 mark, this is the kind of company that we put on our poor boy covered call list for a reason. Great fundamentals. Look at what it's done throughout the year, but the elevated price level, it does price some people out of 100 shares for certain. So you can go into the options market, still get exposure, still play this over time with cash flow. Coach Matt, any thoughts for Tyler here on Jedi Options as we move towards the end of the show?
Just so good to have Tyler back. He does such a fantastic job from an educational perspective. He takes his time in describing and detailing what exactly he's trying to get across. Just love Jedi Options. Well done, Tyler. And honestly, love the poor boy here on Goldman Sachs. Post earnings, you're looking at a potential breakout on multiple time frames. Goldman is killing it. This is a creative way to lower costs, still bring in cash flow, and approach a breakout like this from a conservative perspective. And you look at the Tackle 25, which is the best covered call list out there, hands down. Now I'm obviously very biased, but you have Dividend Fireworks as well. That's a great list from a value dividend perspective. Poor Boys covered call is a very similar metric to the Tackle 25. The one key component Tyler talked about that is the cost of the stock. When you're dealing with covered calls, you got to deal with 100 shares, and when you deal with a company like Goldman, $400, that's a pretty big cost to get involved from a covered call perspective for most people. So these other ways of approaching cash flow through creative option strategies like poor boy covered calls, calendar spreads, horizontal spreads, vertical spreads. These are ways you can lower your cost and still get that same degree of cash flow. And poor boys, the PB list we put together every year is a great list for poor boys covered calls, and Goldman Sachs is a perfect example. And if you're not familiar with the poor boy covered call list, definitely make the Tackle 25 part of your future. And I'm getting excited to break down those lists for 2022. We're starting to get into that time of year where, I start getting into research mode and putting those lists together. And, there's companies like Microsoft that just won't come off. Just won't.
That's just
but typically, the Tackle 25 will see some turnover year after year, as liquidity changes, as price changes. Goldman Sachs was a Tackle 25 stock at one point. Now it's not. What's different? Not fundamentals, it's the cost. Poor boy covered calls are a better way to approach it. Tyler did a fantastic job detailing that.
100% agree. And by the way, if you're a pro member, you can get all of those lists from the Tackle 25 with your membership. Go and review them. Make sure you know what candidates are on those watch lists. I dropped that link in the chat. And I also dropped one other link, and that's a link to our trading labs, which Coach Tyler does teach on Wednesdays. And I know you're back from vacation, Ty. The team Phoenix meets every Wednesday, 3:00 Eastern. What you got planned for the lab today?
Yeah, this is interesting because it's the first lab I've done after being away for 8 days. So going to be a little bit of updating some of the positions I haven't had a chance to talk about over the last week, but we're going to talk a little bit of crypto. I want to dig in. This is my first chance to dig into this new Bitcoin futures based ETF. So they started trading options on this today. So I think that there's going to be some interesting conversations to be had on whether you use this product, and if so, how. And just being able to track that as a new product, I think is going to be an interesting part of the discussion.
One thing you gotta give them credit for. It's a good time to release your ETF the day after you do it. Bitcoin hits an all-time high.
Yep.
Interesting. There's a lot of ways to play it though, Tyler. In fact, look at Coin. I still like what's happening in Coinbase right now. The reversal. I know we're extended in the short term, but man, there's a lot of really interesting proxies to play around the crypto market. Maddie, any thoughts on crypto?
I didn't look at BITO today on their options, but they already have weeklies.
Are you serious?
Yeah, it's bananas. They're like fast tracking stuff.
They already have weeklies, and I mean the delta differences here are acting like this has been traded for years and years and years.
Look at the bid-ask spread. Yeah.
Look at the volume coming in today too.
24 million shares on the ETF. Yeah.
People that don't know volume versus open interest, they might look at that open interest and be like, "Whoa, what is going on?"
Well, and bid-ask spreads too. I mean, if
they're tight. I'm telling you.
Yeah.
That's
very, very uncommon for the first day an option get listed to have $5 price and $10 bid-ask spread.
It's tight bid-ask. It's liquid. Man, GBTC better hurry up on that ETF.
They better get that thing working in the right direction. Yeah, because they got some competition now.
I'm very impressed by how liquid this is already.
Mm-hmm. By the way, one thing I'm also impressed with, just last thought here from me, Matt, you mentioned the Tackle 25. You also mentioned earnings round, throughout the week we cover them. Steel Dynamics that you covered yesterday is looking very, very nice.
Looking sexy, isn't it?
New core reports tonight. There's a lot going on in these markets, guys. There really is a lot going on in these markets. So keep joining us day by day out there, Team Tackle. Appreciate you as always. Matty, any final thoughts for the team out there as we wrap up the day?
No, looking forward to Trade Masters tonight with you and Emily, and then looking forward to watching that battle play out. But outside of that, no, just final thoughts are it's been an interesting market over the last 5 days. We're approaching resistance. Typically, we see a little bit of slowing momentum. Wouldn't hate, and I know Frank would love this, if we just stop for like the next 2 days and we get a little hesitation in front of that all-time breakout. I think traders would appreciate a clean breakout here instead of a 7-day bar breakout, if you know what I mean.
Of course, we always like that hesitation heading into some of the events next week. That would line up very nicely, but we'll let the market test us that. We'll see if we also hit that all-time high tomorrow when we come back on this show. And by the way, if you're out there, one last thing, simple, click subscribe, click the bell. We do the show every day. We appreciate you guys being a part of our community, and we want you to come out and join us and learn from us as coaches at Tackle Trading. Great show today, guys. Appreciate you guys as always. Tyler, Matt, fantastic, and Team Tackle, great conversation. Everybody, will see you tomorrow, same time. And Trade Masters tonight, don't miss it. I'm defending my title. So come and join me, 7 o'clock.